All right. Highlight of the day. If you watch these highlights enough, you know that this red in here is bullish for price because it means there's a lot of shorts, a lot of shorts, a lot of buyers, a lot of buyers. What's needed for price to go up? That's not the highlight, though. The highlight is as we play this, and we do get the uptick and we get the pop. I want you to watch this vertical in here. It's going to light up with some red hollow bars. That shows us, and I quickly refer to these bars. Let's erase this illustration. I quickly will look at all this and say, how does this compare to the overall session? And that's this vertical here. So it's scaled. When this sticks out like that, and then you refer to the top vertical up here, you see that it's the most at this particular time of the entire session, including overnight. So it's pretty substantial. What it tells us is that buy stops were elected, which created shorts to puke. That's why it's red, indicating it's shorts. Green for longs, red for shorts. So it's the position that the color represents. Buy stops that we've been able to flag are order types that are used mostly to exit a position for a loser. Buy stops exit short trades, okay? So when these bars, and there's a lot of them, and they stick out more than any of the others throughout the session, then you got a situation where a lot of people took a loss and a lot of buy stops were elected. Then this number 409 says how many, okay? Now, generally, this is bearish if it gets below where all the short pukes happen. If it doesn't, and it gets at or above it, it's bullish. So it's a great clue either way. I'm going to show you an example of it. And you see my cursor right there flipping around in real time, getting everybody to focus on, this is a moment. There's my cursor going around. This is a moment that if we don't go down and get below the 22 area, it's bullish. Look out above for some more strength. There's my cursor flapping around right there, these shorts that puked. So when you get shorts that puke and we can't go down, when you get additional shorts that's this red that are entering more than the longs, okay, that's a probability that the upside is still the right side. There's more strength in this market, all right? All about probabilities, but also all about reading it in real time. You see me highlighting that during the day, during the live session, and then all this red continues to say and tell us the probability is still more strength. So when the probability actually comes to fruition, and is most likely what happens, and then it does happen, what you're doing is stripping out randomness. You don't feel like it's just a good guess, or you got lucky, because you're not going to be consistent if you always feel like it's a good guess or you feel like you get lucky. It doesn't mean it can't rotate down a little bit. It means if it stays above this 1.5 area, stays red in here, that the upside is still the right side. So I'll fast forward it. You see it does pop again. Now we have the example of another, let's pause it, another example of a bunch of shorts puking, and I go up to here, and I say, wow, it's even bigger in relationship to this area where shorts puked. So let's watch it. I tell everybody if it gets below the 27.5, 28 area right there, it's bearish, and they pushed enough shorts out of the boat to go down. You have to know this from a understanding standpoint. Longs and shorts, we're going to stay with shorts because that's what happened right there. When shorts puke, SP, shorts puke, that means there's less shorts. There's less shorts when shorts puke. That has to make sense. Doesn't mean there's no shorts. It means there's less shorts. If indeed there's less shorts, there's less buying. All right. Less shorts mean less buying. Well, how do you figure that? And you got to go back to What are you trying to do when you're short? You're trying to buy it to cover or exit that short. You hope to buy it lower. That's what makes a profitable short trade profitable. But you're a buyer nonetheless. Well, if there's less shorts in the entire market, then there's less buying in the market, which is one of the things that you need for price to have a chance to go down. We had a chance to go down, but like I said, if it stays above where these shorts puked, it's bullish. If it stays above here, it would be bullish, but it doesn't. And it's about the read and the anticipation of what it's going to do. So when we play it, you're going to see, and you go watch it down here, you're going to see it get below it. And the next right side is the downside as it gets below it. Now it's sideways to lower, but it got below it nonetheless. So this becomes, and then you add some things like the longs are entering, and it's a little Johnnies that come in and buy it when it's too late because they're reaching. And a lot of people could relate to that because a lot of people get stuck reaching. It becomes a common bad habit people get into before they learn the right way to read the market is they're late. These are the longs that are late. And you get a buy pulse, and you get a buy pulse that comes in and kind of gets laughed at. You get our laser that says more longs are stuck than shorts. You have a substantial short puke that comes out. You have the price getting below where the substantial short pukes have come out. And then the market rotates down. And where do we say it was going to rotate down to? At first, probably where the other shorts puked. And it does, and it chops around there. And then, let me back it up. When you get all these longs that come in, what we'll talk about is be careful trying to buy this thing because there's too much competition still. It's not random when we're right because we got the right read. And then when you get the shorts that come in, it pops. But then the longs offset that, all in real time, not after the fact. All these longs come in, keep pressure on it, and the market continues to move where it should move. That's real time. And it's not just real time read, but it's using the information that's relevant in your real time read. Most people's weakness when they get in this business is reading the real time. They get too good with irrelevant data and irrelevant tools of things that already happened. And if it already happened, I'm not devaluing everything that already happened, but I'm telling you, when something already happened and it's there for most of the rest of the world to see, there's a chance that most of the rest of the world sees it. Where your edge and advantages become is information that's coming in right now. Because I guarantee you, not only do most people have no idea of this, seeing this information, because we're unique in who has it, but also what to do with it. If you just think of an advantage being not many people have this information, now you're talking. But always remember, when you're looking at stuff that's already been plotted, whether it's 5 minutes ago or 5 hours ago, it's already been plotted for everybody else. You got to get better at reading the real time. And all the numbers on the dome and all the numbers in a footprint don't mean anything. You have to break them down and understand order flow with the intent of the order. If you could find out what that intent is, the intent of getting in or getting out of positions. We have that with this vertical here, called the OPP, other people's positions, long if they're green, red if they're short. And then this vertical here, the puke tool, where people are puking or exiting. So entering trades, exiting trades. That's the whole shooting match. That's why price moves. People getting in, they're wrong. Getting in, they're right. They're trapped. They're stuck. Too many longs. It can't go up. And the best metaphor is like a boat. If too many people are in a boat, it's going to start to sink. And if someone yells out, hey, if we throw off 20 people, the rest could survive. So it has to shake out 20 people, and then the boat starts to float again. And guess what? There'll be some overcompensation. They might throw out 30 people before they settle down and say, okay, that's enough. That's enough. That's how markets move. Too many people are along. It's a crowded trade. So you have to read other people's positions. So many people don't even know what an edge would be when they trade. How are you going to find it? The first step is to at least know the edge you seek and then work on putting it into your strategy as in that step-by-step progression. And so you see all this stuff, highlight after highlight after highlight. And this one is with those that puke.